Alright, moving into the second part of Darjeeling Co. Yesterday finished half the question. Now we'll take this question forward and then break it down further and look into what exactly is there in the second part of the question here. Is the next part we look into is with regards to we finished the bank part in the last question that they have considered taking a bank loan as well. So this is Darjeeling Co. Yes. So we have done that. Next, we will look into from where we stopped the understanding here. In order to finance the project, new manufacturing line, the company borrowed 4 million, which we finished yesterday, repaid in over 8 months. Rate of 5%, developing new products and expanding the production. It is important as the company intends to undertake a stock market listing in 12 months. In the next 12 months, company wants to be listed on the stock market. So this is a risk. The company wants to be listed in the stock market. In the next 2 months, the company wants to be listed on the stock market. Yes. Hello. Good morning. Right, right. Your name is? Yeah, guys. I think I got your message, right? Yeah, great, guys. I'll just reach out to you shortly. Yeah. Okay, great. Thank you for coming. Okay, looking into the next part here is the stock market listing. The company is about to get listed on the stock market, so that is the risk. Why it is a risk? Because purposely the director want to show more positive image of the company, right? So that more people buy their shares. So there's a good chance that the revenue, profit, assets all will be overstated. So what you should do? Send a very experienced team, maintain skepticism during the audit, and review all the judgments and estimates that would have been made. Okay. So firstly, directors have an incentive to present a very favorable statement, financial statement before listing. What the directors will do, directors will have an incentive to present a very favorable report. Why? Because of the company is about to get listed. When they're about to get listed, what will happen? The directors will present a very favorable report. And what will happen as a result of that? Your revenue, profit, assets may be intentionally overstated. So what you should do is assign an experienced team to the audit, maintain a lot of professional skepticism, and review significant estimates and judgments. Review significant estimates, review significant judgments during the audit. So this is another risk that they are about to get listed on the stock exchange. So they will want everything to be nice and good, that more and more people will buy their shares. The revenue, profit, assets, everything might be overstated, might be, or the management will try to do that. So send an audit team which is very experienced, be alert during the audit, and review any significant estimates and judgments. Very important. This is about the planned stock exchange because they are about to get listed on the stock exchange. The company started a number of initiatives during the year in order to boost their revenue. It offered credit terms to customers on the condition that the said order quantities were increased. So what they have done is they have also created a lot of way to increase the revenue. They want to increase more sales so that their listing is also good. They want to increase a lot of sales. So what they have done, they've increased a lot of sales. They have extended credit to customers on one condition, that their sales order quantities were increased. Right? What will happen is that sales order quantity they would have increased. Right? So collection period has also increased. Credit terms have been extended. So what they have done is they have increased their credit term. What they have done is they have increased the credit term. That means they're giving more time to pay the money. So there's a good chance that your receivables will be overstated and some people will never pay only. So your allowance will be understated. So what you should do is test the credit control procedures. On what basis are they giving the credit? Review age receivables. See how many people have not paid for how many days. Perform post year end cash receipt testing. After the year end, did we get some money or not? You check that and assess the allowance for expected credit loss. Do you need to increase the allowance or not? What has happened over here? They are giving a very relaxed credit. Why? Because they want to increase revenue. So they are giving the credit terms, very favorable credit terms. So there's a risk that the credit collection has increased, credit period has increased, and the credit terms have been extended. As a result of the credit terms have become favorable, more and more people will take credit and they might not actually pay. There's a risk that the receivables are overstated and you have to provide some allowance that might be understated, expenses may be understated. So what you should do, they sort the procedures that how on what basis are they giving the credit, review the age receivables analysis, how long has it been that people have not paid, perform the post year end cash receipt testing. After the year end, whatever cash received, test that, assess the allowance for expected credit losses. For credit loss, test the allowance for expected credit loss. That is the receivables valuation, that the receivables might be overstated. Next, what has happened is, as we go ahead in the case, Darjeeling Co made an announcement in October of its price promise. What do you mean by that? That it would match the prices of any competitor for similar products purchased. It would match the price. Customers who are able to prove that they could purchase the products cheaper anywhere are asked to claim the difference from Darjeeling Co within 1 month of the date of the purchase. Telling if you get a lower price anywhere, I will pay you the difference. Anywhere if you get the lower price. So here customers will claim this difference. Obviously, customers will find somewhere something and they will claim the difference. So their revenue and profit may be understated, their refund liability may be understated because they'll have to give the refund when customer will ask. So first of all, review the calculation of management of the refund liability. On what basis have they calculated the refund liability? Inspect the supporting evidence and verify compliance with IFRS 15. Then what you do? Inspect the supporting evidence. What you should do? Inspect the supporting evidence and verify compliance with IFRS 15. Support. What you should do is support the evidence and verify the compliance with IFRS 15. With IFRS 15, see whether it's compliant or not. First, what they have told, if you get cheaper anywhere, I will pay you the difference. And customers will start taking the difference. Why will they not take the difference? So your revenue and profit may be overstated. Your refund liability may be understated at best. So review the management's calculation that how did they get to the refund liability. Inspect the supporting evidence and verify compliance with IFRS 15. What you should do, verify the compliance with IFRS 15. What you should do is verify compliance with IFRS 15. Review the management's calculation of refund liability, inspect the supporting evidence, and verify compliance with IFRS 15. What you should do, verify compliance with IFRS 15. Verify the compliance with IFRS 15. Okay, next. Customers were able to prove that they could done. The company intends to include a refund liability of 0.2, which is based on a monthly level of claims. Okay, monthly level of claims on the financial statements. Okay. Next, relating to this particular problem here, company recalled the defective products. What did they do? That a problem arose in 2005 in relation to the mixing. And what did the company do? A company had recalled. What did the company do? The company recalled. Number of complaints came. What they have done is they have recalled a lot of products. Recalled means once you have sold, you have asked to give them back. Product recalled, refunds. So whenever you recall the product, you have to give refund. Whenever you recall the product, you have to give a refund. So first they have sold the product, later they've called it back. Please give us the product once. So the company recalled defective paint products sold after June. So what you'll have to do is you'll have to return their money. So your revenue might be overstated, liabilities might be understated, your inventory might be misstated. So what you should do, review all the affected sales, ensure the revenue reversal has been done, verify the inventory reinstatement and confirm refund liability recognition. What you should do, confirm the refund liability recognition. Firstly is product recall refunds. Companies recall defective paint products are sold after June. Whatever was sold after June, company had recalled it. Second, revenues overstated, liabilities understated. Your inventory could be misstated. So what you should do is review any affected sales, ensure revenue reversal is taking place, verify the inventory reinstatement, and confirm the refund liability recognition. Confirm the refund liability recognition. What you should do, confirm the refund liability recognition. So first in product recall refunds, what the company should do, they should recall all the defective paint products sold after June. Revenue should be overstated, liabilities will be understated, inventory could be misstated here. So what you should do, affected sales you go through once, ensure any revenue reversal, verify the inventory reinstatement and confirm refund liability recognition. What you should do, confirm the refund liability. What they have done, they have called back their product. Please give a return as the product, some problem is there. So whenever you call back the product, you may have to give some money back. Right, so you may just have to give some money back if you are going to give them a new car or something like that, or you're going to give them something new. If you're giving them a new product, whatever, or at all, they're just basically just asking for a recall, so you might have to give them a refund also. So what happens, your revenue could be overstated, your liabilities could be understated because now you have to pay all of them back, your inventory could be misstated. So what you should do, review all the affected sales, ensure revenue reversal, verify the inventory reinstatement and confirm the refund liability. What you should do, confirm the refund liability. What you should do is confirm the refund liability. What you should do is confirm the refund liability. Very important. Product recall refunds. Reconfirm the liability. Next, inventory valuation. What about inventory valuation over here? Okay, there's some damaged paint initiated for the specific. Management is investigated whether paint consistency of fault of products can be rectified and sold subsequently. What will they do with it? So now what is that? Damaged paint may have a net realizable value cost. So inventory and profit may be overstated, right? So whatever happened, wherever your paint is damaged, then you have to reduce the value of the inventory. Even if you've called them back, you've got it back. In your inventory, you cannot recognize that full value because the paint might be damaged. So discuss that with the management, do they expect a write down in the value, the cost to NRV, do they expect a write down, and ensure inventory is at the lower of cost in NRV. Inventory should always be at the lower of cost in NRV. So you have to check whether the inventory is correctly recorded at the lower of cost in NRV or not. Inventory is recorded at the lower of cost or NRV or not. Okay. Next, revenue growth and gross margin. Next is revenue growth and gross margin. A significant increase in revenue and gross profit margin may indicate a premature or fictitious revenue recognition. Right? A significant increase in revenue and gross profit margin may indicate a premature or fictitious revenue recognition. That a significant increase in revenue and gross profit margin may indicate a premature or fictitious revenue recognition. Right? Significant increase in revenue and gross margin. So there's a significant increase in revenue. You see, 16 has become 1985 as the forecast. There has been it has come down to 16. Gross profit margin 7410, but the actual is 6190. So comparatively, they're telling that revenue and profit may be overstated. Right? So analyze the trends, obtain a detailed sales breakdown, and perform some additional cutoff testing. Right? There is no reason for a certain increase over the previous year. Right? There's no expectation that from the previous year they should be increased. So analyze the trend. Why is there any such trend that is observable? Next, going concern. What they're saying is deteriorating liquidity ratios. So we'll do the ratios part yesterday we had done. So you see there has been liquidity ratios that are deteriorating. Longer payment periods and bank overdraft indicates cash flow difficulties. Right? As we had done the ratios part of a year yesterday, if I calculated the three ratios, we looked into multiple ratios yesterday. So there's a going concern. So deteriorating liquidity ratios, longer payment periods, and bank overdraft indicate cash flow difficulties. The company is having cash flow problems. The going concern might be an issue. They might not be able to continue for the next 12 months. So they have to make that disclosure. So perform detailed testing to see whether there are going concern issues, and if there are, see if the disclosure has been made correctly. Right? If there are, discuss with the management if the disclosures have been made correctly. Very important. If there are, ensure that the disclosures has been made correctly. There are some deteriorating liquidity ratios, longer payment periods, and bank overdraft. Right? Going concern uncertainties may not be adequately disclosed. So perform detailed going concern procedures, review the cash flow forecast and assumption, and discuss the visibility with management. What you should do? Discuss the visibility with management. Right? With management, discuss the visibility. With management, what you should do is discuss the visibility. With management, what you should do is discuss the visibility. Right? That's what you should do with management. Discuss the visibility. Right? With management, what you should do is you should ensure that you're discussing the visibility with management. Very important. Discuss the visibility. That is about going concern. Deteriorating liquidity ratios and bank overdraft. Going concern uncertainties may not be adequately disclosed. Perform detailed going concern procedures. Review the cash flow forecast and assumptions, and discuss the viability with management. Discuss the viability with the management. Very important. Deteriorating liquidity ratios, longer payment periods, and bank overdraft indicate cash flow difficulties. Going concern uncertainties may be adequately disclosed. Perform detailed going concern procedures, review the cash flow forecasts and assumption, and discuss the viability with management. Right? This is the risks that are found out from the ratios. Once you do the step 2, you have calculated the ratios. In the step 2, what you have done is you have to calculate the ratios. Step 2, what you have done is you've calculated the ratios based on the calculated ratios. They have done this. That they are telling the profitability has gone down, which doesn't seems like indirect numbers, but they're telling the margin. Right? In direct numbers, in the amount it may have been lesser, but the margins are high over here. Right? So they're saying that the margins doesn't make sense. And again, all the liquidity ratios are falling. We looked into receivables, inventory, payables, all the days we had looked into yesterday. So those are falling. So the problem over here is there are a lot of going concern uncertainties with the company. They cannot survive for the next 12 months. For the next 12 months, looks like they will not be able to survive, and they should disclose this fact. So first you do the testing to see if it's correct, and if it is correct, you make sure that the disclosures are done properly. Make sure that the disclosures are done properly. Make sure that the disclosures are done properly. That is going concern issues. Make sure that the disclosures have been done properly. Okay. Revenue and gross profit margin over here. Significant increase in revenue and gross profit margin may indicate premature or fictitious revenue recognition. Inventory valuation, we looked into that your paint is damaged, you'll have to write off the values. Product recall, you have refund, you'll give the refund again. So you have to make sure that the allowance, or if you need to create a liability for refund, that is there in place. That you're telling that the refund will go through. Then review the management's calculation of the refund liability, verify with any supporting evidence. receivables valuation, collection has increased from credit terms have been extended. So again, there's a chance that some people might not pay only. So you have to see if you need an extra allowance or not. Okay, planned stock exchange listing. So whenever there's a stock exchange listing, there's a big chance that people will try to do some kind of a manipulative activity. So you have to be alert, send an experienced team. You be alert, send an experienced team. So again, we are looking into identifying the risk. Why is it a risk? What will be the impact and what will be the auditor's action? Okay, so what you have to do is make sure that read a lot of these questions. We are making these Excel files so that you can read it quickly and regularly. A lot of questions as you revise more and more and more and more and more questions, you'll see the continuity, same thing being repeated again and again. And when you do that, you will get these points really strongly in your mind. Okay, so standalone a question might feel like a lot of points, but you do 8 questions, 10 questions back to back to back, you will start observing that you're seeing the continuity that are coming in the questions. So many things, the going concern, at least fifth time I'm doing probably that over the questions that I've done. Then receivables valuation, almost every question is a receivable valuation. Listing is a natural. Bank loan means easy 2 marks you're gonna get here. But the point is you have to do the question back to back. 5 questions if you revise on a daily basis, you will see that continuity, and with the continuity it will start setting in your mind. Attending class is one thing, but when you do 5 questions every day and you revise it, you will start seeing, oh yes, you can see the continuity, that same point, same things. At least now I would have done 5 to 6 questions. I'm seeing the same points coming again. So many times it has been repeated. So just do that revision here. That's why I'm putting everything over here only, so that it feels easier for you guys. Okay, so this is Darjeeling. Darjeeling. Okay, now 2 parts we finished yesterday. Audit risk, third part is done. Now substantive procedures in relation to faulty paint products. They have paint products which are completely faulty. Now what can you do, right? So what are the things that you will do for the faulty? Action, source, and objective. Very easy, guys. 3 marks max. You can write 4. That's it. But here many options are there so that you can understand. Let's try to understand this. You have a junior. What will you tell the junior to do? Obtain a breakdown of the damaged goods and returned inventory and recast it. You're telling get a list. Get a breakdown. Get a breakdown of what? Get a breakdown of damaged goods. How much goods are damaged and how much goods is returned by from the sub customers have returned the goods. Get a breakdown of the damaged goods and the write down returned inventory. Get a list of all the damaged goods. Get a list of all the returned inventory. Add it up. Recast it. Okay, this where will you get it from? The inventory breakdown or the schedule. You can ask for from the department, give me an inventory breakdown or give me a schedule of inventory. From there, make a list of all the inventory that was damaged, all the inventory that was returned, add it up. Why are you doing this? What is the objective? To verify completeness and mathematical accuracy of the damaged goods, right? To ensure that the correct mathematical accuracy is there of the damaged goods, right? To verify completeness and the mathematical accuracy of the damaged goods. Next, what you will do? Agree the damaged goods manufactured since June to the production records and quantity sold to sales records, right? So where will you get all this information? The production records and sales record. Why are you doing this? To verify occurrence and completeness of damaged inventory. To verify the occurrence and completeness of damaged inventory. Next, trace a sample of customer returns to sales returns documentation. Trace a sample, one sample of customer returns to where will you trace it to the sales return documentation. Where will you get it? In sales return notes and customer return records. Why are you doing this? To confirm existence and accuracy of the returned goods. To ensure all the returned goods are correct and they are accurate. So you just need 3. Now we are reading the remaining just so that you feel confident. Next, discuss the management's plan for rectifying and reselling the damaged products. What do you have to do? Discuss the management's plan. What you will do? You will discuss. What will you discuss? Management's plan. Why? For rectifying and reselling the damaged products. Right? What are you doing? You are rectifying and reselling discussing the management's plan for rectifying and reselling the damaged products. So where will you get this? You have to inquire with the management. Why are you doing this? To assess whether inventory can be sold and estimate the NRV. Next, agree the rectification cost to supporting documentation. Whatever rectification you did, agree that rectification cost to supporting documentation. Where will you get the information? Supplier invoices and cost records. Why are you doing this? To verify accuracy of the estimated repair cost. How much repair cost will be incurred. Next, inspect post year end sales. After the year end, whatever sales happen, inspect the post year end sales. of rectified inventory. Whatever inventory is rectified, inspect a post-year-end sales and agree this to sales invoices. Where will you get this information? In sales invoices after the year end. Why are you doing this? To determine the actual NRV. What is NRV? Fair value minus cost to sell. Next, agree the inventory cost to supporting documentation. Whatever the inventory cost is, like material invoices, payroll records, overhead calculations, agree your inventory cost to supporting documentation. Why are you doing this? To verify the cost of inventory. To verify the cost of inventory. Next, review the inventory write-downs and trace them to inventory valuation schedule. What you do is review the inventory write-downs and trace them to the inventory valuation schedule. Right? Review the inventory write-downs and trace them to the inventory valuation schedule. Right? Review your inventory write-downs. Whatever your inventory write-downs are, review it properly and trace them to the inventory valuation schedule. Right? Like your inventory valuation report. Right? Trace them to that. Why are you doing this? To confirm inventory is valued at the lower of cost and NRV. Why you're doing that? To ensure that the inventory is valued at the lower of cost and NRV. Next, inspect the board meetings regarding faulty products. Whatever faulty products are there, regarding that, what you should do, inspect the board minutes, right? Inspect the board meeting minutes regarding the faulty products. What you should do, inspect the board meeting minutes regarding the faulty products. What you should do, inspect the board meeting minutes. Why? Why are you doing it? To obtain evidence regarding management's plan and resale value. How much is the management planning to resell? How much is the management planning to resell it? So what you should do, you should review the board minutes. What are board minutes? Whatever discussion happened in board meeting, that will be written down. Board minutes. Next, convent inventory is valued at the lower of cost in NRV. Where will you get this? In the inventory valuation report. What exactly should you do? Review the write down and trace them to the inventory valuation schedule. That has it been written down correctly or not? Next, agree the inventory cost to supporting documentation. So what you can do is material invoices, payroll records, overhead calculations. So what you will do, agree the inventory cost to supporting documentation. Agree the inventory cost, whatever the inventory cost is, agree that to the supporting documentation. What are the supporting documentation? Payroll records, overhead and material invoices. Why are you doing this? To verify the cost of the inventory. Next, inspect the post-year-end sales of the rectified inventory and agree to sales invoices. What are you doing? Inspect the post-year-end sales of inventory, rectified inventory. This you will get in the invoices. Right, this information you will get in the sales invoices after the year end. Why? To determine at how much you're selling these inventories for, at how much you're selling this inventory for, at how much you're selling this inventory for. Next, agree the rectification cost to supporting documentation. Next, what you're doing is you're agreeing the rectification cost to supporting documentation. What are you doing? You're agreeing the rectification cost to supporting documentation. You're agreeing the rectification cost to supporting documentation. Right, you're agreeing the rectification cost to supporting documentation, right? Supporting documentation like supplier invoices and cost records. Why? To verify the accuracy of estimated repair cost. To verify the accuracy of estimated repair cost. Why? To verify the accuracy, right? Why are you doing it? To verify the accuracy of estimated repair cost. To verify the accuracy of estimated repair cost. Okay, to verify the accuracy of estimated repair cost, you're doing this. Next, discuss management's plan for rectifying and reselling the damaged products. Discuss the management's plan for rectifying and reselling the damaged products. How will you know that? Through inquiring with the management. What you should do, assess whether the inventory can be sold at and estimate the NRV. At what amount can the inventory be sold and estimate the NRV. Next, trace a sample of customer returns to sales returns documentation. You have a customer return, trace it to sales return. Why? Just to confirm existence and accuracy of the return goods. How will you, from where will you do? Look into sales return notes and customer return records. Next, whatever inventory is damaged, agree the damaged goods manufactured since June to production records and quantities sold to sales record. Why? To verify occurrence and completeness of damaged inventory. From where will you get? From production records and sales records. Next, obtain a breakdown of damaged goods and return inventory and recast it. Recast means just add it up once again. Right? Where will you get all this? From the inventory breakdown schedule. Why are you doing all this? To verify completeness and mathematical accuracy. Okay. So just with AA guys, how it works is just to do a lot of questions at scale. That is why we have just been doing questions, and as we do more, you will start to see the continuity. Right? That continuity will be there as you do this. But with substantive procedures guys, how you have to study is that you take a notebook, you divide the page into 3 parts. and you write down these actions, right? Audit risk, inventory, audit risk, substantive procedures. You have to maintain a notebook where you're writing all these things. Then only the language will come to your mind. Else, just reading, you will also realize that the language will not come in your mind. So you have to take a notebook, and as I am doing the question, you should simultaneously do it in a notebook. So today, you make sure that you're doing the entire Darjeeling Co in a notebook, all the sums, right? Just divide it into three parts. Take the audit risk question, for example. Write the risk, write the reason, write the impact, and write the action, right? Like that, every day, if you just solve two questions, when you write it down, and then you will get the wordings, else the wordings will not come in the exam. Right? You might remember it somehow, but the wordings will not come. For that, you have to write it. Today, entire question of Darjeeling Co, you do it in a notebook, right? Entire question of Darjeeling Co, you try to do it in a notebook today. Very important. Only then slowly, because just listening to me is one thing. Okay, but you have to start doing the question, then only it will help you. Else it will, you will hear me out, you might connect some of the things, right? But you will not be able to actually get the wordings in the exam, right? To get the wordings, you have to spend time with the wordings, right? So Darjeeling Co, what you have to do is, right, write in an notebook, and you see how in a notebook, how clear it will feel after that, right? Write in a notebook. Darjeeling Co, what you have to do is write it in a notebook. Okay, Darjeeling Co, what you should do, write it in the notebook, entire question. Okay, with like the tables I have made over here, like that, just break it down and write it. Divide the page into three and you write it, and then see how clearly you will get it in your mind. Audit is a subject that you have to write and study. That if you just read, you will see half the things that will not make sense only, and it will just fly past, and you will not get that kind of confidence. But when you write it, you do it with me, even if you understand 80%, great. But when you actually write it, and then some things you don't understand, that will give you the confidence. Okay, so just divide your page into three parts, do all the procedures, divide your page into four parts, do all the risk questions, literally write it down, and you will see you can just divide it two parts you do, take a break, two parts you do, take a break, two parts you do, take a break. So like that, if you write it down, only then you will start to get that confidence. Okay, so please try it out today and see how much better these procedures will feel. I am just doing this once so that you can play the video, listen to me, pause, write it down. Again, play the video again, go to the second part of the next audit risk, write it down with me, and then play it again. Pause the video, write it down. So you keep listening, keep writing. So you'll see you'll feel so much more confident and clear. Else, just listening to it at scale will not really help. Right? You have to be actively studying, not passively attending a class. So it will not help like that. Okay. Now, especially that August has started, you have to start doing the self-study actions. Else, it will be a little difficult in the last to just get like, I'm just not getting the touch. It's because this work is needed. At least 20, 30 when you write, then you will start be able to pick the gaps, pick it like the way I'm explaining it. Okay, so today's homework is to do entire Darjeeling Co. So every day two sums I'm doing in class, and those two sums you do. One I do here, one the video is posted every day. Okay, so this one once again, and then the other video that is posted that you watch and you make notes. Divide the page into three parts and you write it down. And when you write it down, and you will start connecting the dots. Okay, it works out like that. Okay, so do that. Or what you can do is with me, you can also write. One sum you do with me, one sum you do in the homework. Divide your page into three parts and do the with me, write it with me. Okay, so that will give you a lot of confidence. Okay, so finishing the last part here is substantive procedures for revenue. Okay, what are for revenue? You know, revenue is sales. So what are the substantive procedures? Okay, now what is the action? Compare. What are you going to compare? Financial statement and budget. Why? To identify fluctuation. You're comparing two things. Just why? To see any fluctuation is there or not. Easy. Okay, what are you comparing? Comparing the current year with prior year budget. Right? Why are you doing? To see if there are any fluctuations. Where will you get the information? Budget and the financial statements. In the budget and in the financial statements. So compare the current year revenue and the prior year budget. Do a comparison. Why are you doing it? To see if there's any unusual fluctuations. Okay. Next, perform a proof in total of the revenue using expected selling price into sales revenue. What you have to do? Perform a proof in total of revenue. Perform a proof in total of revenue using expected selling price and sales volume. Using expected selling price and sales volume, perform a proof in total of revenue using expected selling prices. Right? From where will you get the information? From price list and from sales volume reports. What is the objective? Assess the overall reasonableness of revenue. What you should do? Assess the overall reasonableness of revenue. Assess what? The overall reasonableness of revenue. Assess the overall reasonableness of revenue. Perform a proof in total of revenue using expected selling price into sales volume. So what you're doing is Where will you get all this information? In the price list and the sale volume reports. Why are you doing this? To assess the overall reasonableness of revenue. Okay. Next, compare your revenue product wise with the previous year. Easy. This year, previous year. This year, previous year. Report product wise. Where will you get it? In the sales analysis report. Why are you doing this? To see if there's any unusual movements. Why? To see there if there's any unusual movements. Next, calculate the gross margin prior year with prior year. So you say only comparing up until now. Calculate, compare, calculate, compare, calculate, compare. Right? Easy with the previous years to see if there is any understatement of revenue or cost of sales. Next, agree the sales invoice to the price list to see the correct price has been taken or not. Right? Take your invoice, connect it to the price list to see if the correct invoice has been taken or not. Correct price has been considered or not. Next, recalculate the total of the invoice, including the discount and taxes. In the bottom, discount and tax will come there. You add it again. Why? Just to mathematically if it's correct or not. Just see, so simple. Mathematically if it's correct or not. Next, trace the credit notes. What is credit note? That if you return the goods, they will not give you money. They will give you a credit note to connect it to the original invoices to ensure that cancelled sales are correctly removed from revenue. To ensure any cancelled sales are removed from revenue. Next, trace your customer orders through to dispatch notes to sales invoices. Three-way check. One hand you take customer order, on the desk you keep the dispatch note, and then you take sales invoices. What you ordered, did that get dispatched and did that get invoiced? Three-way check. First you take what you ordered, then what get dispatched, and then what you paid for. Sales invoice. What got billed? Three-way check. You do a three-way check. Order, dispatch note, sales invoices to ensure completeness. Next, test dispatch notes before and after the year end to ensure in the correct year you have recorded. Something in December 25th it was released. It has been reached in January 10th. You should record it as part of the previous year because the moment it is dispatched, it is your inventory. The moment it is dispatched, you should record it. Next, compare the actual price promise claims with the refund liability. That when you told you if anyone gets cheaper, you will give them money. See how much people have found out and give you and compare it with your refund liability. If there are people who are getting it cheaper, assess whether refund provision is reasonable. Should you increase your provision or not? Finally, trace your sales made before the product's recall to subsequent credit notes. You should trace what you should trace sales made before the product recall to subsequent credit notes. Trace your sales made before the product recall to subsequent credit notes to confirm that the recall product sales have been removed from your revenue. What are they telling? Sales made before the product recall to subsequent credit notes, right? Whatever there, the sales made before the recall to subsequent credit notes, just to see all the confirm the the recall product sales have been removed from revenue or not. Whether the recall product sales have been removed from revenue or not. That is about this. Okay. So again, the revenue is comparatively easy. Faulty inventory was again, as you just write it down once, you will get used with the verb and the language. It's just getting used to the language. Once you get used to the language, you will see how easy it is. Right? Half of it is comparison. So see, number one, compare. Okay. Almost out of this, 4 are compares that we can find. Right? 4 are compares. And the remaining that you read, you are checking for discount. You're adding it up and checking the total is correct or not. Right? It is that easy. But the only thing is that's why I'm simplified into this table, but you gotta write it down once. Okay. So what you do is today, this and the one more obviously that I will post, write it down. Right? Once you write it down, divide into 3 parts and you write it down. When you write it down, you will get the verbs. Right? Risk, you write it down. Once you write it down, you will get the continuity. Right? So just listening to me is one thing. Okay. It's helping you go through the question. But this is what not will help you to memorize the question, memorize the flow of how the question has to be solved, right? The flow should be in your mind. Okay, action, source, purpose, risk, impact, right? So when you actively, passively study, it will not help. Actively, you should apply your mind. I have to learn this. I have an exam in 30 days where I have to write this in an exam. Unless you study with that seriousness, guys, it will not, really, it will just feel too theoretical, which it is. The only best thing I can do is simplify it, which I'm trying my best to do so it doesn't feel very wordy. But the repetition has to be done. Okay. So please make sure all the questions that I've done till now, it's all there on YT. Just go through it, play the video, write it with me. With me, you keep solving it. So you see the continuity, you will start to pick the continuity. The whole point of doing so many questions is to just pick continuity. In every question, 50% will be new, 50% will be the same. So your all things will get revised by question you will do. Okay, so let's plan that and get that done. And this is about